Hi everyone, Helen Baker from On Your Own 2 Feet and Brisbane Private Wealth, and we have with us today Steve Garth. Yay! We're giving thanks that end of financial year is over and you got all your bits and pieces sorted, so now it's about moving forward. But before we do that, let's go back and have a look at what's been happening in this financial year.
Well, Helen, it's actually a great time to celebrate. It's been a great financial year return. In Australia, it's up by 12.1%. Now, that's way higher than the average financial year return. That comes in about 10%, so it's a really good year. But the international markets, they're up like 19.8%, so that's way, way higher than their long-term average. So if you're on a diversified portfolio of Australian international shares, it's actually been a cracking 12 months. Great returns.
Excellent. So that's the Australian market over that time. What about more recently?
Well, Helen, as we know, any long-term return, there's a few bumps along the way. And more recently, there's a few potholes coming up as well.
No.
So when we have a look at this chart here, it shows the daily returns of the Australian and US market. And talking about bumps along the way, you can see the first bit of the financial year last year was not that good. In fact, markets were very nervous about interest rates and the economy. And then towards the end of last year, wow, they just took off. Australia returned 20% in a period of a couple of months. It seems to have come to a halt at the end of March, at least for Australia. You can see this kind of grinding along, very flat line. Australia's only returned minus 1.1% in the year. And part of that, Helen, is too because in our market there's financials and miners, because miners are really big and they're not doing very well because iron ore's down, China's not buying it.
Yep.
Now banks have done really well, so you've got this kind of balancing act going on in the Australian market, and you can kind of see that. On the other hand, US just seems to power along, and we might talk about that a little bit more later.
Yeah, banks are certainly love them or hate them, isn't it, for a lot of people? So
well, at the moment, you've got to love them. They're kind of driving the market forward.
the good news is if you've got a mortgage, at least you're benefiting in your super from their profits, and
Yes,
you know,
true.
different things move at different times, as we know. So in terms of international markets, what's happening over there?
Well, interesting. It's very similar to Australian international markets. When you look at the chart here, you can see some of the major international markets. You know, I've got Europe and Japan there, but had the emerging markets the same. Good returns for the financial year, but everyone's kind of lagging in this quarter. And that's probably got to do with economies are slowing because of the higher rates. Over in Europe, they've started to cut rates, but I think the market's cautious about, are we leaving it too late?
Late.
The economy going down? So I like to use the term that markets appear to be in a bit of a holding pattern. They're kind of waiting for the sky to clear to know which way to go. And again, the exception being the US.
Yeah, exactly right. So what's actually driving the US, do you think?
Yeah, look, we often talk about how great the S&P 500's going, but actually it's not really the S&P 500, it's a couple of stocks. In fact, Helen, it's like one stock. So I'm sure people have, well, you've certainly heard of Microsoft and Apple, but the third biggest company in the US is this chip maker called NVIDIA. Those three stocks account for 20% of the US market. It's just huge. And you can see here that NVIDIA, which is now the second largest stock out of that group of three, it's had a phenomenal return of 190%. So that's really what's driving the whole of the market. If I looked at the New York Stock Exchange, which is a big part of the S&P 500, well, that looks similar to Australia, you know, positive for the year, but negative for the quarter. So you can see how powerful NVIDIA is. And I suppose the good news is that all our portfolios have Apple, Microsoft and NVIDIA in it, the power of being diversified.
Exactly right. And I think having lots and lots of different stocks, because who knows where it's going to go from here.
Right.
We don't want to put all our eggs in one basket. And again, strategically, it's about where you are. Are you retired? Are you going to retire? Are you building wealth? And what's appropriate for you? So, of course, we're always here. If you need to have more of a chat, we thank you, Steve, for all your massive input each and every time. And if you've got any questions, you know where we are. We're always here for you.